Welcome to Mortgage 101, where you will learn the important steps of buying or refinancing a home. Hello, I am glad you are here. My name is Nathan Rufty, a mortgage loan originator with over 25 years of lending experience that has your best interests in mind. After listening to this full podcast, connect with me to discuss your home loan needs. Now on with the show. Hello, and welcome to another very informative podcast with Mortgage 101. My name is Nathan Rufty, a licensed mortgage professional in California and in Arizona, assisting you with your home purchase needs, whether it become a refinance or a purchase. I'd like to talk to you today about the process of getting yourself pre-qualified to purchase a property. When you're in the position that you want to explore your options on buying a house, don't hook up with a realtor quite yet. You want to get your financing in place first. Unlike buying a car, you go down there and say, hey, I want to buy a car, and they try to find the financing after that. And 9 times out of 10, they give you some kind of financing. Well, in financing a home is a lot different than financing a car. The credit score algorithms are a lot different when you're running a mortgage-related credit report. When you get a free credit report through the free agencies, those are going to give you the benefit of the doubt and give you a higher credit score than they would on a mortgage-related credit score. Same thing with an auto loan, a credit card, an installment loan, gas card, anything other than a mortgage. Those algorithms that are going to establish a credit score for you is going to be a lot stringent on a mortgage-related credit report. So if you get something through a free credit report like Credit Karma or through your credit card or your banking institution, those credit scores are going to be higher than what a mortgage-related credit score is going to be. So first you need to establish yourself with the financing before going out shopping for a home, because you're going to be wasting your time if you cannot buy a home, especially with the lending environment. It changes and what's going on. And today, the credit scores have risen. They're not buying any loans less than 500. That's what's going on today as I do this podcast on April 5th of 2020. So those things can change during the home buying process, during getting yourself pre-qualified. So first, connect with a local mortgage professional. Let him or her, I welcome the opportunity to connect with you in the states of Arizona and California, connect with you and discuss your financing needs. We're going to look at your credit, your mortgage-related credit report. There's 2 things when it comes to credit: the credit score and what's in the body of the credit. And if you have not ran yourself a full credit report showing you the credit score, whether it be a free one or not, and what's in the body of the credit report, those are going to show collections, judgments, late pays, how much balances are against your credit cards, what kind of history you're going to have, how many inquiries, if there's any public records on your credit report, you will know that. Also, we're going to look at your income. We're going to look at pay stubs, W-2, self-employed, if W-1040s, federal returns, state returns, federal returns. If you're an LLC, a corp, if you're business for self, we're going to look at your Schedule C and also your corporate tax returns. We need to look at all of those to make sure we are qualifying your income right as well, right up front. We're going to look at your bank statements. We're going to make sure that you have enough assets in those accounts. Make sure you don't have anything, a large deposit that we cannot paper trail, anything over $500 deposit. We need to find out what's going on with those deposits and make sure they're getting paper trailed properly. In our business, cash is not king. So that's why you're going to need to connect with a licensed mortgage professional, an individual that does this every single day. Don't go by hearsay. Well, my brother's uncle's friend did this, or my cousin did this, or my sister did this. Everybody's financial situation is unique from somebody else. That's why you've got to connect with the mortgage professional so we can look at your overall financial picture when it comes to income, assets, and credit. We want to make sure when we're running that credit report that you have a lendable credit score at that time. So that's part 1 of the credit report. And then what's in the body of the credit report? We got to make sure if you had a foreclosure, a bankruptcy, a short sale, deed in lieu of, some judgments, some open collections going on right now, some public records, some inquiries. We need to get those things straight right up front so we know when we submit your file to the underwriter, we can paint a picture to the underwriter on what's going on with your credit. Underwriters look at your file. They don't know you as an individual. They just only know you on what your credit score, your income, and your assets look like. So we got to put all the pieces to the puzzle up front. So when that file gets submitted to the underwriter, you can bet that you are 99% sure that you're going to get approved for the loan. So we got to look at your credit. We got to run a mortgage-related credit report, and it is a hard inquiry. So that is going to get dinged on your credit scores. If you had an 800, 3 or 4 to 9 points is not going to hurt you. If you're at a 680 and you run it a couple times and you drop below the 680, now you're a 668, you're between that 660 and 680 bucket, that's going to take your credit scores, your interest rate down. So you want to make sure when you connect with that mortgage professional, that person's right for you, and they're going to give you a blueprint going forward on what to do with your credit. So that's the two-part on the credit is we got to make sure your credit score is there. You may have lendable credit score, but what's in the body of it may hamper the ability to be able to purchase a property. So we got to look at that as well. Your assets. You need to make sure that we have enough funds to get you qualified for the down payment and closing costs. Yes, we can look at some down payment assistance programs. You can get monies from your 401k, stocks, bonds, IRAs, mutual funds, money markets, 403b, 457. We cannot paper trail cash unless you have a receipt, like you went to a pawn store and sold jewelry, a watch, something of value that you can show with a receipt and that you owned it, like a weapon, like a car. We can show that you've registered the car. You had the pink slip on the car, or the car was in your name on the credit report, and you sold it and you get us a bill of sale. We can paper trail all that. We just cannot take, we deposited $10,000. I lent some money to my uncle and he finally paid me back. That has to be seasoned in the account for 2 months. That's why you got to get your finances in order before you connect with a realtor, because that realtor's not going to show you any property. They're going to say, hey, have you been pre-qualified yet? And they're going to say, you might say no, and they're going to try to hook you up with their pre-qualified lender, which is great. But first, hook up with a lender that you've done your research on, that you've liked, that you've done the reviews on, that you can see what their professionalism, how long they've been in the business, before getting with a realtor and having them give you over their preferred lender, because they only deal with typically 1 to 2 go-to lenders that they have a good relationship, which is not bad because you have a good team working with you. But at the very beginning, do your own research, connect with your own. You can have a different lender and a different realtor. I'd like to connect you with one of my preferred realtors if you want to do that as well, because I work with a great team also. But you need to connect with a mortgage professional first to make sure your finances are in order, because if you cannot buy now, that individual should give you a blueprint, a roadmap to say, this is what you need to do over the next 90 days, 6 months, 9 months, 12 months to be able to put yourself in a position to purchase a property. So we're going to look at your assets. We're going to look at, now, some of this stuff is daunting with the paperwork. Yes, it's kind of stressful, but work with the loan originator, because that individual should know what they're doing. If you're looking in California and Arizona, I know what I'm doing. If you're looking outside of these states, I can't do anything. I'm not licensed in those states, only for right now, California and Arizona. We're going to look at your income. We're going to look at your assets, and we're going to look at your credit. The last piece of the puzzle is income. We want to make sure your income is documented. Anything that's cash, can't use it. If you're not getting a W-2 for it, or you're not writing it off on a 1099 with the Schedule C or corporate tax returns, we can't do that. We can't documentate that. If there's something that's not coming in that can be verifiable, some get state income for state disability. We can use Social Security income, SDI, veterans income, disability income coming in. If you have something like that we can document, we can utilize that as income. Cash is not a source of documentation that we can use. You must have employment, like if you're a W-2 or business for self, you got to have a 2-year work history. Now, it doesn't need to be in the same field. You just need a 2-year work history. People do think, if I became this particular job and then I change whole careers, that's still, as long as you did W-2 to W-2, 1099 to 1099, you're fine. But that's where you got to hook up with the mortgage professional to put all the pieces to the puzzle right up front. And that's what I like to do. I like to get everything up front, knowing once we issue that pre-qualification letter or pre-approval letter, you as the home buyer, for certain and 99% certain, you can get a home loan. Now, once we issue that pre-qualification letter, that's good for our 90 days. If something happens in between that process that you or I have no control of, then that's obviously going to take you out. Right now, lenders don't want to buy anything less than 620 credit. So someone with a 580 or 600 credit score, they're out. They cannot buy anything at the present moment because nobody's buying that kind of a loan product below that 620. So that's where that income becomes very, very valuable. Is we got to make sure we source all that income that is paper trail. Cash is not king in our business, so we cannot use that unless you're a 1099 employee or your business for self. But if you don't have a 2-year history of receiving that income, we cannot utilize that income. If you went from a full-time to a part-time, even though you had a 5-year full-time employment and you now went a month part-time, that income is gone. It's out, because if you don't have now a 2-year history on that part-time income, we can't utilize that income. So before you make any drastic financial decisions or assets, income, or a credit, connect with a mortgage professional before you do those things. Don't go buy a car yet. If you're looking to purchase a home in the next 6 months or 12 months and you need to clean some things up, don't go add to your debt to income ratio, which is your income versus what your outgo is on debt. Buying a new car, getting a student loan, co-signing for somebody. Those things really hamper the ability for somebody to purchase. If you co-sign for somebody and they don't make the payment, we got to hit you for that debt. Or if you bought a car for somebody because their credit's not as good, but on paper, you own that car. I mean, you got the loan in your name and they're paying you and you're paying the debt, or even if they pay the debt directly, but it's not, they're not on the title. It's very tough to documentate that if they didn't co-sign for that debt, because they're legally not obligated to that debt if you're the only one that signed for that auto loan, student loans, or credit card for somebody else to help them out because their credit's not as good. You got to think about doing that. I mean, that can be a detriment to you on able to get a job or able to purchase a property because you are debt heavy. There's too much debt in your credit report that it may not be yours, and you know that it may not be yours, but on paper, it's yours. So connect with a mortgage professional that is licensed, that him or her know what they're doing in this business so they can get that blueprint. You may not always like the answer. We don't like to hear the word no. We don't like to have roadblocks, but we only facilitate a loan for you. We want to give you the roadmap and a blueprint to get there. But you as the individual, as the home buyer, must take these necessary steps to be in the position to be able to purchase a home. Somebody with a 550 that doesn't have any money and the debt to income ratio is 55%. I'm sorry, you're not getting a loan. We must get you debt ratio down, get that credit score up. We got to work with you. As long as you're a willing and able participant, you should find a willing and able loan officer that's going to work with you. But you as the home buyer, you got to take all those necessary steps. We only can do what we do on our end. We don't write the rules. We just got to follow them, just like you do. And you may not like the answers that we give you because you want to hear somebody say yes. If you find 10 people that say no and you're looking for that yes, you're going to keep looking and looking. If that one person says yes out of 20, something's wrong with that person that said yes. Because we all follow, if you're a traditional lender with Fannie Mae, Freddie Mac, FHA, and USDA, we all kind of follow the same, the same set of guidelines. There's overlay. So they have minimums, and some lenders may say, hey, we're not going to insure somebody down to a 500 that FHA will insure. We're only going to insure somebody down to a 640 or 620 on an FHA. So that's what's called an overlay. But you as the home buyer must get qualified first. I'm telling must. You go out because you may not know what's on your credit report. You may think everything's fine on the credit, but there's something that popped up that's a medical a collection that you thought you turned in your cable box. Now there's a collection on your report that's suppressing your credit score that's not able to get up. So you got to take care of that collection account. There's a lot of things going on in the credit. You may not know what's going on with it. The income, you think that's claimable income because you got the income, but it may not be that 2 years because you heard it from somebody else that's not in the industry who says, yes, you can use that. No, you can't. Or the assets, you may have a good amount of cash stashed away somewhere. Somebody owes you money, and all of a sudden you put that money in there. Now you've got your down payment or closing costs, but it's cash. We can't paper trail that large deposit over $500. So those are the things that you as a home buyer should do first. I said you must or should do first is get yourself in the position to be able to purchase, get that financing in order first. And then you know with confidence that you can go out there and find a property, make an offer on. Now, I'll go into a next podcast about now you're lendable. The property now needs to be lendable. So let's first get you as the home buyer lendable to be in the position when it comes to credit, assets, and income. My name is Nathan Rufty with licensed in California and Arizona. I'd love to connect with you and talk to you about buying a house in those two states, California and Arizona. And if you cannot buy now, I can walk you and put you on a blueprint, a roadmap to say, this is what you need to do. What is your time frame? Okay, in this short time frame or longer time frame or medium time frame, this is what you need to do to put yourself in the position to be able to buy a house, whether it be 30 days, 40, 60, 90 days down the road, or 6 months or 12 months. I'd like to have a conversation with you. I'm not a hard salesman here that's going to sit there and press you to do something that you're not, for one, in the position to do so, or for second, that you're not ready. I want to present you options based on what current lending environment are today and based on what your current situation is, your financial situation, to put you in that position to buy. If you're ready to buy now, perfect. If you're not, let's put you in the position to be able to buy down the road. So I'd love to connect with you, talk to you about your financial situation, talk to you about you buying a home in California and Arizona. All my contact information is below. And thank you very much for taking the time out and listening to Mortgage 101. Thank you again for taking the time to listen to this very informative podcast. Remember to subscribe, share, like, and comment. There is no better time than today to explore your options to purchase or refinance a home. Please call, text, or email me at the information below to get started right away, and I look forward in hearing from you.